Is that it? Are we live? Are we good? Are we there? Justin at Ivy League Trading again? Hold on. And we're back. All right. Sorry about that, guys. Justin at Ivy League Trading here. Thanks for joining us tonight. As the title states. Whoa. Whoa. All right. Anyway, what is it that nobody's talking about? I'm going to show you guys that here in the charts. All right. I think you guys are going to really, really like that. But listen, before I get into that, if you could, please like, share, comment, post some tickers, ask me any questions that you'd like, ideas for the week. Okay. Let's see if we are good. It looks squared up. So, again, if you could, like, share, subscribe, comment below. If you guys have any editing apps that you could recommend, post them in the chat, whether they're free or charged or whatever, and maybe a source of somewhere to get some information on education on how to use it, because again, I'm new at this. So let's get back to the point. So what are we going to do tonight? We're going to go over some charts. We're going to go discuss the prior week, and then we're going to get into the question of what is it that I'm noticing that nobody's talking about. Nobody's talking about it. I brought up the Fed yesterday, okay? We brought up the Fed and their balance sheet. This treasury, like cash grab, you could call it, with these bills that they're going to be offering. So they say that this can suck liquidity out of the market. And I'm sure it does, okay? And then they say that, and they is, people that, I don't even know why I watch half the videos that I do. But they say that the issuing of these bills is going to cause another banking crisis of sorts. I just think that if that was the case, I just don't think that it's going to happen that easy, because again, they can make the rules up as they go. Whether we like it or not, whether we agree, whether we disagree. And trust me, I completely disagree with a lot of the stuff that comes out of their mouths. Like, seriously. Some of it is absurd. I feel like it's just, let's just tax everybody. We're more worried about us than them, when in fact, the people that are in office should be worried about us. Me, you, the businesses, corporate to small businesses. That's initially what the politicians were brought about forth, in laws and things of that nature. They were to protect and and help the farmers and the blacksmiths and all the industrial things and stuff that was going on at that time. And I just think that it's gotten so out of hand. Like, I mean, they just put what was it? A couple years ago, they put the fence around the White House up. Like, it just feels like after 9/11, and I'm not getting down this damn rabbit hole either, but it just feels like after 9/11, it's just things have just, I feel like they've just changed, and I don't think they've changed for the better. I really don't. I really don't. I get, we do a lot of stuff in the world and everything, and that's fine, but I also don't agree with, dictating, laws, stuff like that. There's a fine line for everything. I just like common sense. I just feel like, you get these kind of politicians to go in, and all they want to do is tax. They say they don't. Let's just tax the rich, this and that. It doesn't matter who you're taxing. At the end of the day, you're still taxing somebody like crazy. I don't know. There's ins and outs. I'm not going to get into all of it. What I agree, and it doesn't matter if you're rich or poor, So I just feel like a lot of the good that's done by corporate America provides individuals and families with the lives that they do have. And it's like you get you get I don't, I can't think of the word right now, but it's like you get in trouble for that. Like that's frowned upon. It just comes with such a bad, like you have such a bad name. Like I don't know. But anyway, let's get into it, guys. So what is it that nobody is talking about? All right, so I'm going to bring up two screens here. Now, one is going to be a tad different, and I promise we're going to get into tickers. We're going to get into the week. Again, post your tickers in chat. Just anything you guys want to go over. Any questions? I can turn time and sales off because, just nothing really going on right now on a Saturday night. Guys, if you could, like, share, and subscribe for me if I've earned it. Okay? I am a work in progress, as you are when you do new things. Real quick, I want to give a quote. I want to give you guys a quote here. All right. Failure is the opportunity to begin again more intelligently. By Henry Ford. Again, failure is the opportunity to begin again more intelligently. So I wanted to bring some kind of good omen to the stream and good omen to you guys. There's been a lot going on in my family. So before I was coming on the stream, I was running a little late because there's a cat that I feed that, was outside and stuff. And she's such a, I don't know if she has a home because she does, she stays here at night and then like goes somewhere during the day. So, it was about 9:30 and usually she comes like, right around before the sun goes down. And she wasn't here. So I was a little worried, and then she did. I don't know if she was waiting for me to come outside or what. But anyway, so that's good. And then watching my parents' dog, so you might hear scratching at the door after my cat. But anyway, I hope you guys are having a blessed weekend. You're taking the time off, unwinding, spending time with family. And making sure that you're able to, because you don't want to not be able to. There come a day where something might happen and then you just live in regret that you didn't spend enough time with them. Give me 1 second. I'm going to let her in right now. I don't know. That was weird. Let's get into it. I do apologize. I got to get better at these things. So, what is it that nobody's talking about? I mean, they're talking about it. In what manner? I'm not sure. Do you guys notice what we had this week? So if you don't know, all right, we've had technology and the S&Ps kind of just outperforming the Dow and the IWM, okay? Which I'm sure you know. I am sure you know. So, I'm going to make this a little more pleasurable for your eyes. I'm going to have to save this again for the defaults and stuff. So what I think is happening here. Okay, if you've heard about the whether it's the Nasdaq 100 the Russell 1000, 2000, or 3000 for that matter, whichever. Okay, there's been a big gap. There's been a big gap between the IWM still at lows and the Qs, up whatever percentage they are year to date, 20, 30. They're up handsomely. And that's always a sign. And I think before 2020, I never heard anyone talk about the IWM like that, at least during COVID. Maybe I just didn't hear about it and people were. But there was one person that I know that did talk about it and did mention it. All right. And I learned it from that person. But it really wasn't because it happened after COVID, after 2021 and going into the bear market, that you had a distinct divergence in the indices. Now, what are the indices good for? The indices are good for knowing if you're eyeing them all up. You can include ARK, ARKK. No, seeing where institutional ownership is going. What's leading? What's going on? So if you have a big gap, okay, here is the daily chart of the IWM. Let's do a weekly. Okay, let's go to the weekly because it's going to look a little bit better on this screen. Okay. We have 2019 or 2020. All right, now let's go to the Qs. So what do we have here? So we have, if you notice, and look how far above, from the COVID low, or even just from 2019, from the drop in 2020, I mean. So here you have the IWM. It's still sitting here at lows, so we can just do this. We don't need to worry about COVID and all that stuff. Okay, which it seems like there are, like it's just trying to poke its head. There's been news trying to poke its head out. Anyway, the IWM. You have a nice double top here. There's a big level of resistance here at that double top. Well, you don't necessarily have that double top here on the Qs, okay? Now, because, again, the IWM rose. This is when the Dow and the IWM were leading, and you can see here where the Qs never made it back up that high, all right? They never made it back up, which is nice because, look, if you look at it, you put in a double bottom, you ran up, you broke the resistance, and technically on the weekly chart, you came back and retested it. Now, that's the 50% retracement mark. Again, if you don't know, I have this fib up for one reason and one reason only. That is from the COVID low to the COVID high. Now, why do I have it there? You guys may have heard me talk about it plenty of times, but I have it there because that's what the Fed is trying to erase or get out of or recover from, however you want to word it. Okay, that's where all the liquidity was given to the markets, to us, to lending, and just everything that went on. The amount of spending from politics to the Fed. So we're trying to replace that because they think that caused inflation. Now, whether that caused inflation or not, or the fact that there was just a glimpse of time where everybody was locked up, didn't really spend much money for whatever reason, they had jobs and were still given free money, and it just, you had just a spur of everything, just, people feeling safer. And that I personally think it comes down to time, because I had mentioned that. I said, give it a year and a half, 2 years. I said, 2 years from now, I assure you, you're not going to be worried about COVID like you are today. And I got backlash for it. Now, I'm not this COVID shot this, COVID shot. No, I don't do that. That doesn't help nobody. Me personally, I have faith in the American people, the biochemists, the people that go to school, the people that put their time, their energy, and their smart brains into something to help fix a problem. I just have full faith in the American people when it comes to stuff like that. All right, so we're not going down the rabbit hole, but so in a nutshell, China closed down. This and that happened. They're trying to raise rates because prices came up because there was a ton of spending and less demand. Okay, there was a couple problems with this demand, though. That demand was China was closed down. And, there was a lot of money to be had. So maybe they took advantage to try and get the money, and costs just, you did have oil just go from negative to 100 and some a barrel. You just had this extreme negative to positive flow in everything from food, travel. I mean, just like any kind of data you want to look. The Fed is negative to extreme. This whole thing has just been from one extreme to another, okay, in all the different categories that there are. Let's get back to the point, okay? The IWM was not after Thursday and Friday. The IWM was still at lows. The Qs and the SPY, they're up here. So what did you have Friday, Thursday, and the Friday? 1 second. Oh no, I think I hit something. I'm sorry. I just want to make sure. Okay, so you had the Qs and the SPY, you just had this run up, and then you had the IWM and such just sitting down here at lows. Now, that in a sense is like a negative divergence. So if you want to look at what happened in 2021, we were flat the whole year. The whole year. Not the Qs, not the SPY, not even the Dow. All right, look at this. Look at this. This and this is not a healthy market. Okay, this and then this, gradually going up with it, that's a healthy market. So this told you a story. This told you a story. And what happened when you started to come out and try to follow the rest of the market? What happened was the bear market ensued. It didn't make it. It ran. It quickly got rejected. Okay. So there was the storyline in here. Like, man, these Qs just can't break out. That's a problem. We should be tightening up our seatbelts because something's not right. That's not a healthy market. Again, what do we have? We have the Qs breaking out. The IWM still at lows. Now they're trying. Now we're going to see what happens if we can just have a healthy market and they match up to an extent, and then we go until there's a problem or the next event or whatever, or we just never look back. Who knows? All right, who knows? But what I do know is if you watched yesterday's live stream, I want to apologize for what it was because I was new. I need to learn to record and do all these other things. So yesterday I said that I just had a brain fart. I'm sorry. This is all new to me doing this stuff. So yesterday I brought up some good points that I just completely forgot about. So yeah, anyway, we're going to go back to the IWM, I guess. I don't know. Maybe I'll fall back into it. So, and for that, I apologize. Towards the end of the stream yesterday, I brought up some really good points and some things that I think are really, really useful that you guys could use. So now, again, we're going to attempt to break out here. Now, we're going to wait and see. We obviously have a brick wall in the IWM at 190, 192. All right, 190, 150, call it, okay? Let me get to the point, okay? What is the point? What is nobody talking about? Well, if you don't know, all right, the 3rd June, the IWM does rebalancing. Is the IWM, now you see the Dow was also down. So, this is just an idea. Again, I'm not a financial advisor. I'm not giving you any investing, anything to take my words and start trading the IWM like it's going to break out or it's going to attempt to break out and then crash. We don't know yet. Time will tell. Oh, that's what it was. I knew I would get to it. So I told you guys yesterday, towards the end of the video yesterday, that if you notice, rates rise, okay? Once they rise, they get to a point of 5, whatever. They're all different because of different things that happen in history. Let's just say, we quoted like 2007, 2008, because it was very close. It was very similar. They were at like 1%, like 0.8 or something or whatever, and it went up to 5.25. Okay, but I think they did that in about 2 years. So rates rise, and and it doesn't have to stay there, but here's what happens. The rates rise up to 5.5%, and there was as soon from the peak. Okay, now we're talking to the peak. We don't know what we're going to get. We don't know if we're going to see 6, 5.5, 5.75, 5.25. We can all think what we want, but we also don't know. We don't know. At the end of the day, we don't know. We have a very good feeling about this meeting that there is not going to be a rate hike. Okay, that's almost certain that they're going to pause. We also get CPI numbers the day before, the 13th. If you don't know, the Fed meeting's on the 14th. Leading up to the 17th, OPEX. There's still a lot of data to be had leading up to. So let's just say that we are at the peak right now. So we would have to go back to, I guess, the last meeting, okay, or whenever the rates peaked. Go see when the rates peaked, okay. From where the rates peaked, give it roughly a year. We're gonna say 10 months to 14, 15 months. That 2-3 months prior, then a year, 2-3 months over a year. If you catch my drift. All right. If you would like, you can watch the video I posted yesterday. Go to Fred, or you can go to Fred and put in unemployment and put in the Fed funds rate, and you'll get that chart. All right. We could do it here if you guys want. Okay. Nope, I don't want M2. All right. You know what? I can make it easier. So what we'll do is I will show you one here. We're going to go add, edit graph. I don't know where I went yesterday. This is what I mean. Edit graph. Yesterday I was, there we go. Add line, there it is. I don't think it popped up. Okay, Fed funds. I guess this means, I hope this is what I had. I just put Fed funds rate yesterday, so you'll have to go back and see if this is it. Come on, man. There we go. Maybe this is it. Okay. Add data series. There we go. All right, gang. Here's what I mean. Now, this took a little time, and yes, we had COVID. Okay, rates peaked. Okay, rates peaked 2019, 2019 of February, and they hold, and yes, they start cutting them, but you have what, a year go by. No matter what happens from the peak, from February 2019 to literally February 2020 is when it took off. Let's go to 2007, 2006. All right. They peak. They peaked at 5.24. 5.25. 2006 of July. All right. 1 year. Well, it already started to rise a little bit. And then 2007, right? There's where it took off. So, well, that was 2008, but it's just hard because I'm sure you guys are having trouble seeing it. So let me zoom in just a little bit. Here we go. There we go. August 2006. And it actually started to tick up in July here. As you can see, like, look, boom. September 2007, guys. Boom. You know what I mean? 1 year. And this isn't just it, 2000. July 2000. March 2001. It had a bump, but it didn't really start till May. Is when you had that, rush of just, so basically a little under a year, a little over a year, call it a year. Okay? What happened? Peak, April 1989. Okay? And then, what happened? We're in June 1990. July 1990. There it was. July, August. That's when you started. So, guys, this is what I mean. Everyone says, and you can go back here and see the little ins and outs of stuff. All right, I think I had it from like the 60s or something. So there was a small one that I also did that was like in the 80s also. I think it was like I think it was back here. So like we had a peak. We had a peak 1969 of August, and then, well, it started there. It started December 1969, but still, it like I think it was that one because there it peaked in 1966 in November, and then right there is you guys probably can't see it, but then in August 1967, it like let me see if I can zoom in some more. 67. I'm sorry, guys. Where are we at? 2000. Let's go to 67. See, it wants to bring up the. So if you can see, it's right here, guys. Right there. See what I mean? Right there. So keep that on your eyes, and right at this dip. It's pretty much right at this dip, and you see this unemployment rate right here just take off. It just took off. Started to, but they had already cut rates too. So then there's the lag for that, and then Fed funds rate, they just rip it higher, and then what happens here? Let me zoom back for you. All right, they ripped it higher, and that didn't, because actually the peak was here. They went higher, but the peak was there in June of 1968. And then by right there was the uptick. And then by October of 1969, so about 4 months afterwards, 5 months after June, 4 months after, that is when it, when the unemployment, I mean, you could technically say that the unemployment rate started there. It's because when it ticked up, it just went. So that was just something I wanted to bring to your guys' attention. But my main focus here was the chart of IWM and the spread between the Qs, all right, between the NASDAQ. Now, there is rebalancing the end of I think it's like the 24th of this month, okay? So is this been lagging, because one, yeah, we've had the banks, we've priced that in, but it's been choppy. They have not fully recovered, okay? But is it because by the time we start thinking about being bullish, we are like 2 weeks away from rebalancing, and maybe they wanted to wait, and maybe they got some information? All right, we got the debt ceiling passed. They think the banking things are good. We're getting rebalancing for the IWM. Maybe that's what, until the next call, this is what possibly pushed it. I mean, there was something I thought about earlier, and I can't remember what it was, but there was a reason for, like, a possible reason for the extended rally today for these stocks to catch up. All right, we know we're getting we are, I'm going to say, for the most part, I don't know, 60, 70% chance, like I'm going to say like almost an 80% chance we don't get a rate hike, because they know they've done so much in 1 year. They want to give it a little time. I mean, they got to know the amount of time it takes for these lags, like historically. Maybe it takes a little bit longer because it's more money sloshing through the system, and it just takes a little more time to get, eaten away. What was the other thing we mentioned, guys? What was the other thing we mentioned? I'm going to give you a clue. Okay, I'm going to give you a clue. It has to do with small companies and locking in rates and running out of cash and having to go back to get more. Whether, you can do offerings, there are options, but there's only so many options. And is the bank willing to give it to them? I mean, I'm talking about companies that, let alone, aren't cash flow, don't have free cash flow, but barely bring in enough cash flow. If they do, some of them don't even bring in enough cash to pay for daily expenses. Okay, what happens when that money starts to dry out? That means these companies are not going to be able to get the money that they want at the interest rate that they would like. So if they didn't lock them in long term, when does the money run out? And who messed up as a manager? Who messed up? Who's going to mess their company up and not make it out of a supposed recession? There's going to be, I'm not going to say that there's going to be, but there could be a few. I would like to, that brings opportunity, but they're saying, a lot of people are saying that there's going to be companies that don't make it out of this. All right, so you know, uh, that's what I wanted to talk about. We went through data yesterday. The data is showing us that things are slowing. Things are slowly slowing. All right, slowly slowing. Say that 3 times fast. Okay. This is next week. I could bring up last week's, but so we got these, on the back of these unemployment numbers. Maybe the market's saying, hey, as long as people are still working, there's still money sloshing around. That still means that people are going to have money for the next quarter to buy things. And maybe, let's say, the next job number is like it just slowly, the unemployment rate slowly ticks up. Now, we've been ranging between 3.6 and 3.7, okay? The high threes. What if we slowly, because I looked on here, okay? Now, I also look at other countries, all right? They're forecasting 15.1, just for an example, for Germany. All right, this is Germany's balance of trade. 16.7 was previous. Consensus is 16 billion. 15.1 forecast. There's a slowdown there. Okay, just however you want to look at it. All right, ISM services, we get that. So there was something that it was probably from last week. I mean, I can bring it up if you guys want, but I just want to get going and get through some charts. We have an OPEC meeting on Sunday. Okay, everything was green at the end of this week, guys. Just about everything. So what's that going to mean for oil? Now, the meeting I think starts on Sunday. I don't know if it's 1 day, 2 day, if it's a 1 day thing. I want to say it might be a 1 day thing. I don't know why they're having it on a Sunday. Maybe it's just the way that the time falls, and I don't know. It's pretty weird. Maybe because it's a Monday where they're at, and it's Sunday for the States. So if you guys have tickers, post them in the chat. What are you looking at? What are your ideas? You want to ask me something? Shoot me a message. Shoot me in a text. Or in the chat. I mean, don't shoot me, but you know what I mean. So again, the inflation's coming down, guys. All right, so we had a great jobs number, blah blah blah. The unemployment rate's still low. Non-farm payrolls. We had jolts. We had a lot of things. So if you were to go look down here, it's showing a sign of slowing, a slow slowing. Okay. ISM manufacturing PMI. This is contraction. Anything over 50 is expansion. Anything under 50 is contraction. Okay. So the forecast was 48. We came in at 46.9. Okay. If you look at these, it paints the picture, everyone. 3.7. The forecast was 3.5. Previously 3.4, so it ticked up a bit. Right here. Total vehicle sales, 15.5, 16, previously 16.9. Now, that is something that can change with seasonality, whether it's, maybe end-of-year bonuses, or, maybe you see something like where people get bonuses 2 times a year and they get a vehicle. Like they get one in June and one at Christmas, or however, there's many different things. So this could be seasonality. This doesn't necessarily, you'll just have to watch it. Okay, just keep an eye on it, and if you want, write it down, because this is just one aspect to a lot of things. Because this person, if they're counting new vehicles, which they should be, New light vehicle sales, like I thought, new, rose 19.6% from a year ago to a seasonally adjusted annual rate of 15.45 million units. Okay, for a ninth month straight. Okay, well, that does not seem like a tick up to me. Now, that's month over month. Here, it's probably month over month. But, because you have like work trucks, you have people just, getting new vehicles. You also have people leaving like New York and states where they don't need vehicles and moving to states where they may need a vehicle. So just keep your eye on things like that. I had just thought of something that I wanted to get out, but what happens here when could this have been helped by the college tuition thing that's getting rolled back? A lot of people had a lot of extra cash, guys and girls. So it's going to be interesting to see this number. It really is. It's going to be interesting to see this number. Oh man, I did have a really good something to say. Look, 696 Baker Hughes rig count. It's just everything is just showing a slow, contraction, just slowly. Okay. It's brutal. I promise. I'm gonna get good at this, guys, ladies and gentlemen. I'm gonna get good at this. GDP, that looked like it rose, or no? Yeah, it did. But there was an employment number or something from ECB that I wanted to show you guys. Oh, this is what I wanted to say, because the real estate thing. So look at these new home sales or new vehicle sales, everyone. All right. What does this affect when what does this affect when this starts slowing? Okay, this is the salesman's mortgage, rent, extra money. All right, this is the company's earnings that get affected. There's a root just on this one aspect of data on total vehicle sales, because this, like I said, is new. This is counting new vehicles. So this is salesmen. This is the company's earnings. This is parts for the future. This is showing, and this isn't just this month, I guess. And like I said, don't take my word for it. This could be a seasonality thing. People could get bonuses. We're going to find out. Okay, a lot of people had a lot of extra money for a lot of different reasons, whether they didn't have to pay their tuition or whatever. So I want to get into some charts. I'm sorry if I rambled on. Weekly relative performance, guys. Consumer cyclical. Okay, consumer cyclical. Dude, they kicked ace. They kicked ace this week, bro. Or Thursday and Friday at least. So if you join us, guys, let me mention we are live on YouTube Monday through Friday, 7 a.m. to 4 p.m. Come join us. I trade live. We trade live together. News, information, help. If you're struggling, you're doing this by yourself, come join us. We post ideas. We do a lot of fun things. That's Ivy League Trading at youtube.com, 7 a.m. to 4 p.m. Monday through Friday, guys and girls. So, if you want to be a trader, there are so many things you need to learn, and you need to give it time. Okay? You got to give it time. So this week, we seen this. Okay? I called it out. The chat called it out. So we painted the picture, and we bring these things up because if you don't get the visualization of what the market and the world market's doing, you're not going to have a clue. Especially if you're just going to buy straddles or strangles the night before for the next day and just hope you get lucky or hope you get that overnight move that you're wanting. You got to look at this stuff, guys. It's going to paint the picture for you. All right. What did we see Tuesday? We were red. Okay. What happened Wednesday? We were, I don't know, gray. Whatever the hell the color is that goes from red to green. All right. So yes, like this beige color, maroon, dark, like ugly maroon. I think that's maroon there, but So we seen it. We seen the shift from red and then to green. And wouldn't you believe it? In 2 days. 2 days, y'all. 2 days. The S&P went about 14, 15 points. In the blink of an eye. The debt ceiling got passed. You got these wild job numbers. All right. The Fed's probably pausing. Look at this. This was your low. 416.91. Call it 416.50. 417. We're going to call it 429. 428 we'll call it. All right. There's 8 points just from the close to here. At least. Because I think 421. So we broke the psychological 420, guys. This was it. And I think this is what made us rally Friday, was the fact that we stuck the psychological 420 level. What was this level also? We mentioned this stuff. If you join us, Ivy League Trading, youtube.com, you will know this stuff, guys. You will know this like the back of your hand. I promise. You will become a better trader if you join us. I can't guarantee you that, but I'm going to be certain you're going to learn a hell of a lot. All right? You're probably going to learn a lot more than you would if you paid for a service and got your data, and you paid to have your data, and you just got screwed more ways than one because they think they can do better with your money than you can. No. Come join us. Ivy League Trading, youtube.com. Look at this 100-day, y'all. So this 100-day, we know, and even on the weekly, all right, this has been resistance. All right, we broke it and we closed above it here, but this was the sticking point, guys. We were able to stick that psychological number. And what else is it? That's our 23.6 fib. So not only do we have one indicator, we have two. You know, this 23.6 fib has just been a brick wall, and then we're going to start running into another level of resistance. Okay? That'll be all-time highs. I'm just kidding. All right, but if you do want to know, we're about at that level now, and I don't think we get through it the first time. All right, so that's our weekly 100, and same for the Qs. Okay, the Qs, guys and girls, the Qs stuck the 100-day and ran. Look, bounced off of it, ran. The Dow 50 weekly moving average, stuck to 200, hit the 50, and plowed through the 100-day. Stuck to 50, plowed through the 100-day. Now, does it hold? Now, next week, you watch. Even if the Qs and the SPY pull back, see if you can catch the Dow or the IWM long. If this level holds here, we got to go to the daily. I'm on the weekly. I apologize. Because there is also the 200-day. Look at that. It's stuck double bottomed on the 200-day. It broke it, but look at that reversal, guys. And this candle's pretty big red, right? But it also, there's a lot of green there too. There's a lot of buying there on that tail. And then look. So keep that on watch. Watch for possibly a pullback. You got the 50-day crossing up above the 100-day on the Dow. Increase in volume. Look at this, guys. These are some of the places you want to be. Do you want to be a trader? Do you want to get better at trading? Do you want to learn how to trade? Well, look. Take this chart right here and stick it up on a wall. Because it doesn't get no better than this. All right? Ivy League Trading, youtube.com. Join us Monday through Friday. Live. Message me. Post something in the chat if you want to learn how to trade for real. All right? We've seen this. We were watching this. We were watching transports. Transportation is very important also. Is that why all the car manufacturers and stuff rose this week? Consumer discretionary, as we were talking about, which we're going to get into. Cat, Tesla, like we have a nice chart pattern we'll go over with on Ford. So I mean, this is picture perfect, y'all. I mean, these tails, kind of like was hinting like, yeah, that 200 days holding. You pulled back, you still, this was an overnight gap down, but it sold off in the morning, rallied. So what do we do? What do we look for now? What's the plan? Well, first off, I still have more work to do. We'll get into that more Sunday night. All right, We'll get some news tomorrow. We'll probably have some politicians come on the news stations. Maybe something hits the tape. I know something will hit the tape. But the IWM, the same. Cruised right through that 100-day. Like a missile on an increase in volume here. All right. So you need to watch for this rebalancing, okay? Now this doesn't mean that like this is why we're down because of the banks and then they weren't sure and then we're getting closer to June and there's this sell-off, there's the rebalancing coming up. Do they want to buy the lows before the rebalancing? I'm sure. So we ended the month and started the month green, guys. We ended the month of May. I'm sorry, I get those two mixed up. We ended May green and we started June green. Do we end red this month? Or do we start the next month red? I don't know. We'll have to wait and see. But I do know with the Fed funds rate and the unemployment chart, we know, okay, if this is the peak, we know we got about 8 to 13, 14 months. 15 months, call it, and still, we may give or take there. Maybe it happens sooner. Maybe it happens a little later. Maybe it doesn't happen at all. But we use the data that we have, and we make the best possible decision off of that stuff. All right, so let's get into the nitty gritty, y'all. Everything is just green. All right, gold, red, silver, red. Your basic materials. You have some utilities here. Not sure if it was off our earnings, some random semiconductors. We'll have to get into some semiconductors. So if you want, now is the time. Grab your pen and paper. We're going to start going over some charts, y'all. And if you have any ideas, anything you want to ask me, any tickers you want me to pull up, any charts, just post them up in chat. Again, if we've earned it, could you give us a like, maybe a subscribe? It would be really helpful to the channel to help get out what I'm trying to get out here, and that's this ridiculous industry that thinks that it's okay to charge the amount of money that they charge, and then keep your data and then possibly sell your data, and just use you for every little thing that they can, and say, oh, we have this, we have this, we have this. Join. Okay, well, what makes you special? Why do you get it? Why can't I get it for that cheap price? Oh, we have this, we have that. Well, yeah, you're probably getting your information sold to get that at a discount. I mean, I don't know. But why are some people just randomly lucky because they're best friends with one another and they can just give out discounts for tool stuff that you don't need, that you have the internet, you have everything for free? Because I'm going to tell you right now, if news hits the tape that is that important, you don't need to be the first to the party. You're going to get 2, 3, 4, 5, 6, 7, 8, 10 days to play that upside or downside if the news is that big. You don't need to be the first to the party. Is it good to have? Yeah, it's good to have. If you just have you can get down some rabbit holes, sure. But if you're not profitable yet, don't. And don't think that just because you join a group or this and that doesn't mean you're going to be profitable either. Who's to say their trading style works for you? Who's to say that you can handle the trades that they get in? All right. I'm trying to build a place here where traders and just not even traders, but people that want to learn about the markets and learn about trading can get the help that they need. Okay. I'm so passionate about this stuff. I've proved to myself time and time again that I don't know. I do pretty damn good for myself, and I'm pretty damn good at this. I'm pretty good at this. I make my mistakes. I'm not going to be right all the time. But just the last 2 weeks since I've started this channel, we have literally called the market to a T both weeks on a Sunday night. We've called the market to a T. Now, I don't like that for one reason, because it makes your head big, and then you get your ass kicked because you try and make a call, and you've been right 3, 4, 5, 6, 7, 8 times in a row, and then you start just thinking you're hot shit, and then the market slaps you. Then you get slapped. So I just don't like that, okay? Because, I like to do the if this, then that, if that, then this scenario. But again, if you don't know and you want to become a trader, or you want to learn about not investing, but you want to learn about trading, join us. we're live Monday through Friday, 7 a.m. to 4. I appreciate you guys stopping by here tonight. We're going to go over some charts. We're going to talk about the dollar. We're going to talk about Bitcoin. We're going to come up with some ideas. Okay, again, consumer cyclical, it was hella green. Okay, hella green. So consumer cyclical right here, Amazon. You got your Teslas, Toyota. We were just talking about car manufacturers and such. Mobileye is in auto parts. I did not know that. Why did I not know that? Why did I think that Mobileye was like a CrowdStrike or something? Why did I think that Mobileye was something different than a parts thing? There should be share unlocks for this Mobileye, guys. If you guys want to check it out, I think about like 2-3 weeks ago or something, there was I think like there's some shares that have been unlocked that could be sold if the employees or if the board or anybody starts to do so. I think Intel also owns like a majority of this or something. I'm not sure though. Maybe this is a different Mobileye. Maybe it's a different Mobileye. I'm not sure. But guys, I gotta show you all something, okay? Industrials. Okay, industrials. Look at CAT. CAT was up almost 8.5%. Okay, Nike was up bigly, 4%. Guys, the opportunity was just endless. We called out oil at 60 and said, listen, I'm not telling you what to do, but I am looking at oil. All right, there was a reason why. There were actually 2-3 reasons why. All right, so we're going to come up with tonight. We're going to go over charts again, and keep that IWM in your mind. We're going to go over all that stuff. Like I said, there is rebalancing for it. They say usually on those days there's a lot of volume, so keep that in mind. I think it's June 24th or so, but it's the third Friday, I think, of June. Or the third week of June. I am so sorry about that. Let me grab my pen and paper while you do the same, and we're gonna get to work, y'all, because we need to have a plan for Monday, Tuesday, Wednesday, Thursday, and Friday of next week. All right. If you want to make some money, you came to the right place. Now get out your pen and get your paper. All right, y'all. Sorry about that. I wasn't sure. So, I want to bring up one thing also, guys, real quick. Small caps. Okay, so small caps, I was kind of hoping. So, if you don't know, all right, if you're new to trading, all right, I need to tell you that in order, especially when we go back to these regular environments, like, look, the volatility's been getting killed. Volatility's been getting killed, guys. So if you haven't, I'm not telling you what to do, but this is what I do. These are the things that I do. I practiced. Okay, I practiced entries for whether it's large cap, mid cap, anything. Okay, I practiced whatever it is that I wanted to learn. I wanted to learn small caps. Well, I practiced. So small caps are a really good tool to have in your arsenal. Okay, because if there's nothing going on with large and mid caps, maybe you don't have no news. Maybe there is a Fed day on Wednesday and Monday and Tuesday are very slow. And maybe you see the small caps pick up. So you need to, it is nice. I'm not saying that you need to, so let me rephrase that. It is something you should think about. Again, this is just what I do. I'm not a financial advisor. This is not financial advice. Because this stuff is very risky. It's very risky. And it's even more risky when you don't know what you're doing. Okay? They make stop losses for a reason. I'm just going to say that. All right? Maybe paper trade. So I needed to learn how to trade small caps. Okay? Now, and I don't just mean trade small caps that are trading 200,000 shares. Okay? I want liquidity. I want some liquidity. Okay? I want to know that I can get in and I can get out. Now, sometimes the spreads get really wide. Maybe they just shoot up for no reason, go short, go long, whatever the case may be, but they're a good tool in the arsenal. So I was watching UCAR both days, Thursday and Friday. Thursday, I was playing Alibaba. We called that out as well, the China ADRs. We called out the China ADRs. So I was watching it, I think right around here, and I just didn't partake because we had Baba, we had, I think, the SPY, we had a few other trades going on, and I just wasn't looking. So I was hoping that maybe UCAR was going to be the stock to get this sector going, okay? Because they're small caps, kind of that's how they work, okay? It's like you get something, let's say, because we were thinking possibly 20. This thing got up to the pre-market highs of around 15.30. So once something starts, like let's just say this UCAR, or if you get a news, like an FDA approval or something, whether it's a big short covering in one stock and then it leads to 2, and then that 2 leads to 4, and that 4 leads to 8, and then it's just everywhere you look, your scanners are going nuts. Anything you type in that box to the top left there, just any random ticker you type in is just going. And you're like, this is madness. This is crazy. And then it goes on for like a week and a half, or 4 days, 4 days or so. Usually when they get going though, you should have like roughly a week, about 4 days, 5 days, 4 or 5 trading days. And then it slowly dwindles back out and the shorts start winning and the buyers step away, or they kind of just take their foot off of the pedal. And then that's when, the shorts put their foot on the pedal, and then you get the reverse, when something breaks. Like, do you see the cycle that I'm explaining to you about their buyers? When things get going, they're putting their foot on the pedal, and then they make some great trades, like just this UCAR, $10 to $20. That's 100% trade, guys. You catch this thing from $2, $4 to 18, like you're making some damn good money. All right. And when their foot comes, when the buyers, you put your foot on the gas because, you're in the second, third day of just small caps just ripping, and you're just, everything is great. And then you start backing off, and then the shorts start winning. And then there's that silent period. And I thought, and I was kind of hoping, selfishly, I mean, I guess not selfishly, but for every winner there's a loser, and for every loser there's a winner. I was kind of hoping maybe UCAR was going to get the small caps started. There have still been some random runners, obviously pre-market, and you can trade these if you have the right brokerage. But I gave this thing to 10. I didn't even take a position on it, but I said, let's see what it does at 10. Around $10 is where I was like, it was right around here, actually. Yeah, it was like kind of floating with this bull flag. the prior day, up around prior day's highs, and I was like, let's see if this stock can because what time is it here? Yes, but we'll look at that volume too, guys. These are the things you need to know. And even look at the volume on the day. Look at the volume on the day, guys. This is a 15-minute chart. This volume is nothing like this volume. So traders where were they? There's obviously not much going on here. So where is this? Where are these bars at? Probably the overall markets because of the job numbers, or it was a Friday. That's also an option. It was Friday. Maybe a lot of people had off. Maybe people went to the beach or whatever, what have you. UCAR didn't get that going, and maybe, like I say, because it was a Friday or something. But I was hoping UCAR would be able to get the small cap section going. I would, again, if you take a day, paper trade, whatever, buy 5-6 stocks and just say, you know what, I get my 9 EMA. Let me see if I can buy this thing with momentum. Just know where your volume's at. You want to look to the left and do all that good stuff. Again, if you want to join us here, we can help you, or tell you what I do with my money to try to help you, make trades that make sense, and those cents make dollars, and then we also help you manage your risk the right way. And we have the formula for it all. You want to trade options and manage your risk and know that you buy 5, 10, 15 contracts, you're risking this amount, and if you stop out, you lose. Doesn't mean you have to let yourself stop out either. But if you don't know, like me, I know or have a sense, I can just, it's not that I just feel the market or I feel the music. I just know, okay? I just know that if a stock is going to break out or not, okay? Let's just start going through the stocks because that'll lead me on to the SPY. What happened with the SPY, guys? Obviously, we rallied. What happened here? Was it this stock? I think it was SPY on Friday. I don't know. I had to go back and look. But I said, if you're going to get long, you got to get long right now. And it went. What was it? Because I know I took Amazon through the highs. Okay, I took Amazon through the highs. I know that. So like I say, I use all time frames. So I did get Amazon here, right in here, guys. I took profits here, just into, the previous high, and then I took a piece off through the high, kind of right at it, and then I took a piece off here, because I knew, I just felt it. I could tell the price, we weren't extending, and I didn't think we were having that. But at the same time, if you look at the price at 945, okay, we go back. What was the SPY doing? Oh, shit. What was the SPY doing? See, the SPY here, guys, was pulling back. 945. So, see at 946, 945. The SPY was pulling back. And I'm like, SPY was pulling back. I didn't know if we were going to go retest this 420 level. So, there was a lot of things going on. I just took my profits. I should have gotten on Amazon at the bell, but that was Friday, not Saturday night. All right, guys, so let's start with the SPY. Where are we at? What are we going to do? Let's start with the weekly. Again, we have our Fibonacci retracement from the COVID low to the COVID high. You guys already know that. For those that have joined us from before, and I will clean these charts up. So we have a break through the 100-day. All right, or the 100 weekly moving average. Just trying to go quick. All right. There you go. Just so you guys can see that. Okay. We had the break. All right. This is our wall. I don't expect us to get through this the first try. We could. Now we can. Anything can happen here, but we did put in a little tail towards the end of the day on Friday. But I don't think we break this level on the first try. I'm going to say right here, it's 431.69. I mean, come on. 431.69. That's definitely a psychological number, right? So, I guess I guess I could put a price there, 431.69, right around here. I'll do it. Right, that's 450. Where am I at here? Right here. All right, so the daily, guys. Let's go to the daily. And we're going to go through what was strong and what was weak so we know, now again, we're going to get news Sunday night. We're going to get some news Monday morning. We might have, earnings are pretty much done. We may get some more that, you could play, You got to go where the liquidity's at, all right? At least I recommend it. I would recommend going where the liquidity's at. So, all your basic moving averages are just like they should be. 50 heading up, 100 heading up. 200 is like slightly down, but it's looking like it wants to poke its head towards the upside. But more importantly, the 200's at the bottom, 100 top, 50 on top of that, like the way, a healthy market should be. And of course, I'm out of coffee. All right, so we looked at the daily, we looked at the weekly. Now, what I want to mention to you guys, all right, what happened on our 2 days of the upside? Hell, even the third. What do we got? Friday, Thursday, Wednesday. Okay, what happened? Let's go back to these 3 days here. All right, let's paint the picture. Now, I'm going to go show you guys support and resistance and the levels that we have. I just told you one, but this 430 is going to be a psychological number. A psychological test. Up here. 430 is going to be a psychological brick wall. All right. And I think that we can break it, but I don't know if we do it on the first try. All right. What's the catalyst to break it? Is it the debt ceiling? Is it the job numbers? Is it Powell not cutting rates, but like stopping or pausing? Maybe that is enough. Maybe you get not necessarily a short squeeze, but maybe you get a mass. A lot of people caught off sides and they start buying, but we'll come up with that game plan tomorrow. So what happened? 1, 2, 3. Let's see if it happened. Nah, it didn't really happen there. What happened here? We had a sell-off in the morning. This is a 15-minute chart to rally the rest of the day. A sell-off, rally the rest of the day. Sell-off, rally the rest of the day. So what does that mean for us? All right. Well, first we want to see if we can get a pullback. A healthy market would be a beautiful pullback here at this double top. So this is going to be my level, and as a matter of fact, I am going to remove all these other levels because I think we come down, but I would much rather my charts be clean for my guest than for me. So maybe I'll worry about it another day. But look at this volume, guys. Look. You had some heavy volume here to rip it back up off of this 421 level. So, 421. So the 15-minute chart, let's see, do we have bear stock? And I told everyone in my shorts, in the videos, all right, there's a lot of things that we look for. We traded the SPY this week. We traded it a couple times. Even last week, I think, also. Where did we? Oh, yeah, we got a 50% gainer there. So here, all right, there are things that we look for to give us upside. You really want that negative divergence. You want that RSI curling up with new lows being put in. All right, you got that on the IWM and the Dow and such. All right, so 430, guys, or 422, 423. 423 is our level. We want to look for another pullback at that double top. All right. Pullback at that double top. Let's go to the Qs. I could probably just bring up futures. They would probably be a hell of a lot easier. Futures were the laggard last week to an extent, They closed green from the day before, but on the day, they still did close green, just not as much. All right. Look at this beautiful test of the prior day's close, guys. This is what these turquoise dotted lines are. If you see them, usually they're going to be at, not usually, they're always at either, sometimes I don't, depending on the market, I may not have like one for, it's the close, the high, and the low. The close, high, and the low. Now, if it just was a trend type of day, maybe there is no low and, You know, I don't put one there. Or if I do, it's like at the open. And then I'll move it to the low if we test the open. You dig? All right, so what stocks do we have? What's strong, what's weak? So we know the Qs were the laggard starting from Thursday to, well, Thursday we had a strong day, and then Friday we kind of just based out a little bit. Okay, now the IWM and the Dow, there may be some good opportunity in these sectors. There may be some good opportunity. So let's go to our daily chart. Let's see what we have. All right, daily chart. Look at that rocket. Look at that damn rocket. Little mixed on the moving averages, but your 50's trying to curl up. I want to see a retest, and I already see a few levels that I think that's going to be a little tough to get through if we get there. If we get there. All right, if we get there. Yeah, we're gonna call it here. There was one more level that I seen that was I'll have to go back through it. Maybe it was it? It wasn't on the weekly, because there was. No, we're just gonna go with that right there. That is the level. Sorry guys, that is the level. So you want to look for a pullback, okay? You want to look for a pullback and see if we can hold the 100. If you can't hold the 100, then you got your 200. As simple as that. You had a 200 cross down below your 100-day moving average. All right. Look at your RSI. Look at that RSI in MACD. Okay, this is what we want. This is bullish divergence. So you have the low. You have a high, you have a lower low, but look at your RSI. It's at 35, not 27. Okay, and you continue. You're not putting in new lows, but you're damn near a lot lower. Just look, a rising, putting in higher lows on the RSI, on the daily. That's momentum. That's relative strength. That in and of itself is relative strength. So keep an eye on the IWM. Let's zoom on in. I could take you to the weekly, but just right now I'm not going to, because I want to speed through some of these stuff. I don't want to keep you all out too late. Look at this beautiful double bottom, y'all. Boom. I mean, look at the bullish divergence. There's a low in the MACD. You put in a new low, and that was lower. All right, whatever. You guys feel me. But anyway, you know, it's... I don't know. I do know I was just hoping for something pretty cool there, but no. So anyway, you have... There's a lot of stuff, all right? I think I brought it up here. We're going to go over consumer cycle. We're going to go over a lot of stuff. If you guys want, put some tickers in the chat, okay? Sorry, I was just trying to make sure my little girl was okay. OPEC news. All right, oil. Right. Let's write these down. So, oil, consumer discretion, or consumer cyclical. Yeah, consumer cyclical rocked. Now that doesn't mean that these are still going to be strong on Monday or Tuesday. Okay, this market could flip. All right, so. I was just looking at because there was some trouble with these with your capital market stocks like your Morgan Stanley, Goldman Sachs, Schwab. Schwab was up 3.7%. Rising rates. We're going to go over the 10-year. So I'm going to put oil, CLT, and then we have obviously our large cap. And then we'll look. Oh, there was a. Please be on here. Please be on here. Curo, guys. This is a small cap I want to look at. All right. Why do I don't want to look at Curo? Okay, notice UTRS. You see that green candle to the right? Let me zoom in for you. It's kind of tough. But if you look right around here when I bring it up, look at that tail on the daily. Look how it went up to 50 cents and then just, boom, got rejected. LVTX rose up, boom, got rejected. Look at Curo. And then what do you have there around that where it says 1.5 million? That's support. Okay, look at that support. Okay, so at 104.54 or 154, $1.54, it looks like what, $1.50? That $1.50 is support. So I'm gonna write Curo down because I just want to keep that on the list. All right, maybe that gives us some opportunity. Alti looks good, but it looks like it's at resistance, not support. If it would have broke through that what is that, $6 mark, where you know, that $6 mark where it says 1.5 million. If it would have broke above there, you see where them tails are, and that green candle to the left. If it was above that and like holding and closed right around there, then that would be a really nice stock to look at. All right, MDB again. Look at the tails. You know, look at the sell-offs. Mixed. There's some mixed feelings there on this one. IOT, idiot or whatever it's called. JFIN. Not a bad looking chart there. Not a bad looking chart. Wonder what they do, if they're a real company or if they're not sure. So those again are just how I look at stocks, guys. LARK, not bad. Holding. All right, that's at resistance. HURC is at resistance. Now that stock doesn't look too bad. It's got a tail, but it's on the opposite side. Yes, it closed red, but those buyers stepped in to try and bring that thing back up. FRZA, I've heard of that one. Look at the tail on that one also, guys. That's got a tail to the upside, and it just, that looks like the VIX. So yeah, so again, so we have oil, we have TLT or TNX, Curo. I'm going to put on Amazon because Amazon had some news. And we'll just go through some large caps. We're going to go through some Tesla. If you guys have any tickers, thank you for putting that in there, Ray, man. I appreciate it. My guy, Ray. Treasuries, guys. I don't know if I spoke to you guys about that, but Yellen's wanting to, they're going to be offering about $1 trillion or so. So watch for that. So I want to watch the dollar with these. If these yields keep rising, I want to see what the dollar does, and then in turn, I want to see what Bitcoin and the Riot, the Maras, see what they do with Bitcoin and Ethereum. They did it, I think, yeah, on the daily. They did close green, right? What day is that? That is Friday the 2nd. Man, that's slow volume. Look at this big base from where it was at, and it just could not get up there and hold it. I'm telling you, if this thing held this area here, you started to hold that, shit, you were looking at another rally to 40 grand. You know, but that's just a brick wall. That is just a brick wall. That 30,000 psychological level. So yeah, again, thanks for joining us, everybody. So we have OPEC. We talked about that. That's Sunday night. All right, we went through this unemployment, so we know, guys, give it time. So let me stress to you guys that when we're going through these charts, don't tell the market what it has to do. Okay, just play the chart. All right, so we said SPY. We were looking for a pullback to roughly at least around 423 to 420. We want 420 though. All right, so let's do it. Let's go get our chart. Let's get some charting, guys. Previous high is this IWM. I want to see a pullback. I'm a little quiet here because I'm going through. There's not much price action here, but there is a gap fill. See that gap fill right at the 200? Let's see if that's where we pull back to and attempt to rally again. Or, no, there. And look, see where that level lines up, guys? That was the gap. Look, isn't that funny? Isn't that crazy how this works? If you come learn and get it, and look at the gap here, guys. You didn't notice that gap, did you? Open, or close, open. There's actually a small gap there. And what is that? This is actually a big island reversal to an extent. Okay. So are we testing that island reversal? It's a small one. Okay, it's a small one. I don't want to say small, but you know. See, there is a tail there, so I don't know. Sometimes you can get carried away, like me. It's late. So IWM 181.42. Look at this increase in volume. So guys, like we said, look for the pullback in the morning. All right, look for the pullback and hold. So what I would say is resistance 1. No, I do not want to edit properties. I want to edit my properties like Ben Mala. I want to pull back and hold of this previous high, okay? If we get that, or if we don't get the hold here, then I'm going to put, so that's going to be resistance 1. Okay, and that, I have it as a like thicker level because that's a more meaningful area of support where I think it should hold. Because that's the close before the gap, okay? That's your previous high, all right? And it also lined it up with one of the moving averages, whether 200 or 50 day or something, okay? So that should be a line of support for us. The 100 day is where it is, roughly, okay? It's roughly the 100, am I right? Yeah, the 100 days. See, the 100 days like laying right on top of it. But all right, so let's go to the 15-minute real quick again. So I'm gonna be looking at these, man. This would have been a great opportunity if anybody got it, man. Shout out to you. Post it up in the chat, man. Tell us how you did. That's a great trade. The IWM. That's a great trade. This is your danger level. This is danger. Danger. Okay. Danger. You break that. It's going to take a catalyst, obviously. If you get a news, I'm going to expect us to rally. That's my target. That is my upside target right there, guys. So let's see if I'm checking back in with you in a couple weeks or so, in a week, 2 weeks, and say, what did I say? This was my target. I trust my levels. Okay. Again, I've been doing this for a long time. I'm not going to say a long time, like I've been doing this for 15, 20 years, but I've been doing this for a good amount of time, y'all. All right. This is my passion. It's something I'm good at. And I just, the game face comes on when that bell rings, even when I wake up in the morning and get ready for the markets. And look at that resistance. Did you guys notice that? Look at the resistance and then the break. So we want to see if this holds on Monday morning. Let's see where we open at tomorrow, the futures. And that's a clean break, guys. So I'm going to be looking at that. All right, so equities. All right, so jot that down on your charts. I'm actually going to make this. So with that resistance and then the break, I'm gonna look for that to be a support level. But really, this previous high with the 100 day, that's I'm gonna consider this a minor level of support, and then this one is like a my support one. So how I do things, I'll do like R1, R2, R3, and S1, S2, S3. All right, and I have you have your major levels, and then you have your minor levels. Once you do this for an extended period of time and really take the time to learn and get an education, guys, an education, and this is so important because I swear to God, it'll change your life if you put in the work and if you just listen to the education. Okay, where do you get that education? You get that education right here. All right, ask me a question and you tell me and you give me your impression of whether you think I am pretty good at this or not. You know what? See if we get to this level in about 2 weeks, about a week and a half, or next week. All right, we're at 182. That's about 8%, 6% roughly. We could get there by sometime. All right, guys. So let's go. Ray said he wants cat, Amazon, Airbnb. I think it is. I just can't see. Yeah, cat, Airbnb, and then Amazon. Okay. All right. Let's go to Amazon first. All right, so we got that. Oh, I want to show you guys real quick, right? I'm sorry. All right. Go to the weekly chart here. Look at the transport, Joe. Transports are very important to the economy, not just to the economy, but the market. All right, so important. This is, your goods. This just covers everything. There's a reason why people watch it. So we stuck to 200 on the weekly. All right, look at these tails off of it. They were to every dip they were buying. Now every rally they're selling, and that's what you're supposed to do. Buy the dips, sell the rips. So look at this 100-day moving average. It looks like we just broke above it on the weekly. Your 100 weekly moving average right here. Okay. Let's see if that holds on the weekly chart. Look, resistance. So resistance, break, support. Sorry, I know I said that was resistance, but and then a break. So it held, tried to rally, and then failed. That was when the banks came out, though, I think. Yeah, I want to say this was bank and Fed news. All right, so we're going to watch the transports there. Look at that, guys. A break of the 100-day on the daily. All right, you're stuck to 200-day moving average, and you're off. Okay. I have some really cool charts. So I'm going to go through 4. I'm going to go through Ray's questions. Guys, again, throw them in the chat if you have any questions, tickers, ideas, anything you want to ask me about myself, anything. Again, if we've earned it, could you please hit the like, share, and subscribe button? That'd be greatly appreciated. Look at that, guys. Look at that rally. Look at that rally, y'all. Again, IWM and the Dow. The Dow double bottom right on the 200-day moving average, and we gap. That is a gap and go. A gap and go. Where do we go from here? Well, I'd like to see a pullback. We need a pullback. Pullbacks are healthy. That's the thing. I'm looking at it. So far, just from what I'm seeing, 336 pullback, but I want to dig a little deeper. All right, dig a little deeper. Give me actually the 1 hour. There's just a previous top there that I see that I'm just going to include that. I don't want to fill up all this shit because I want to be able to trade them. Oh, it's the 1 hour. That's why too. Okay. All right. Let me go to the 50 or 15 minute. Okay. What a rally. I mean, that's all I can really say is if you hold that double top and then here at 335. All right. 335 is a psychological number. Let's see, support, resistance. Boom, boom, boom. Yeah, the IWM looks a little bit better. Okay. Now I gotta go through some stocks. Just in a downtrend where we've gotten this rally, so okay, MACD. Maybe I. Oh, man. It's just not as clean as the IWM and like the Qs and the SPY and stuff. And that's okay. You know, that's alright. There's another area, 335. Kind of already have that down. I'm just gonna go on to some tickers, y'all, because I'm not gonna sit here all night and just spend it on the Dow. See what pattern we're trying to put in here. That's another thing you guys want to look for. Sometimes they will show signs of a pattern, and I'll bring that up. Let's go to it now. All right, Ford. Like we said with the transports. Look at that, guys. Now, I did two. Because I don't want to be... Because you see why I did this second one? All right, originally, I had this. And then Wednesday, Thursday, Friday. Do you see how we followed the trend? And then we had to break out on an increase in volume. And then the pullback to test. To see if we can rally and break out. But if we can't, the 200-day gets in the way. And we fall. Or maybe it's not time yet. Maybe there's still a little consolidation left to be had. But I feel like 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, all of its life, it's been getting smacked down by the 200-day. All right. The 200-day has been, it's kryptonite. All right. And then 1276. I'm going to write that down, or 1275. But 1276, y'all. 1276. You're going to want to know this level. Okay, you're going to want to know this level. Because this level is a gap fill. Not from previous, but from before. So usually what these... So here, I'm mixed. Okay, I have a few mixed feelings on this because you got news with Ford and Tesla about them doing the battery sharing thing, which is good. This is what the whole point of all this is, to help, you know, climate change and all that stuff. But, you know, you've had the Volkswagen CEO come on out and say that automobiles don't even create 1%. It's not even 1% of the global CO2. It's more infrastructure. It's more like industrial, like manufacturing, like big energy shit that fucks with the earth. Excuse my language. But that's what he said. He could also be wrong. He could be telling a lie. I don't know. But I do know this looks like a good area for sure. I'm going to make that a number 2. So anyway, I don't know where I was going off on a tangent with that. Okay. I'm going to leave this one white because I don't know if it's a buy or a sell yet. So this pattern is what I'm trying to get at. This pattern. Okay, this is a... Let's go... Auto zoom. Okay, let's go back. So Saturday, I think it was. Or no, Friday. It was either... Or no, Thursday. Thursday or Friday on the SPY. It put in a bearish candle. Or a bearish pattern. And that was a it was a reversal. Okay, it was a pennant. It was a how do I explain this? It was just kind of like this, but going up. And what it is it is a bearish reversal pattern, okay? And let's say if the stock is, going up at an angle bull flag, but it's angled real tight and up, usually there's a breakdown, okay? Now this is, kind of like angled. It's not angled. Excuse me, I'm so sorry. It's not angled down as opposed to like, it's kind of just, you're going through these lower highs and higher lows, okay? And it's more like a, you know, we're not selling. What are we going to do? It's not facing down, but it's also not facing up or sideways. So it's more like to the side. Like seriously, like look at this. It's kind of facing down, but the bottom or the bottom is in an uptrend. So that's where the getting, like, you would want to see the bottom of this going down with the top end of the trend line going down also, if you know what I mean. So this is somewhat facing, it's literally just going to the right but slowly up, and it's getting into this inflection point here that either it's going to break up and out or we're going to have a breakdown. So watch news, okay? You need to watch news for Ford. This is a good chart, guys. Last time I seen something like this was on Lucid, and that was 2 summers ago, okay? I think it was 2022 or 2021. I called it out. And it was on a weekend, and I called it out, okay? People capitalized off of it. What happened that Monday when the trading day opened? Lucid, there was news that Apple had chosen Lucid for the new car that they want to make. Well, guess what? We already knew, and we posted it, and I still have it as a post that said, watch for news, watch for anything, but we got an increase in volume, which you have right here. Now, I'm not saying this is going to. You're not in the COVID area where there's just a ton of money, the Fed's not buying a shit ton of bonds. And then that person that is the bondholder just is taking that cash and putting the money to work somewhere else. So you may not get the extension. It may not play out like that. All right, we're back in the real world. Look at this volume, guys. Look at the break. If this second one, because originally I had this trend line and that trend line, and I'm like, let me look further, because I see here on this sell-off and close, and then we close hard, and then this downtrend. I'll show you. I'll show you what I mean, okay? If you guys are new. Oh, shit. You can still see it there, but do you see how this, like, you sold off and you got bought up, and then it was a little bit further down. Gap up, and then look, boom, boom, boom. A little extended, but that's the opening candle. So that's just order flow at the bell, or that's order flow that's already put in before the bell. When the bell rings, those orders are getting filled. So you have some madness going on there. So, but that's pretty cool, isn't it? So that's why I put the second one in. I'm like, hold on, because this one is more of importance. So what are we going to do? We're going to measure this move, and we're going to see where we're going. Point blank period. See that? Boom, test. Boom, 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 brrr, boom. So these are the things we look for. So I have both, just in case there's a longer trend and this thing's still not done consolidating. I have an extra one there. So let's measure this move, gang. Let's measure this move. All right. So if we want to do it from, we have pre-market on. So if we want to do it from here, let's say, you could do it from this tail, but that was aftermarket. No excuses, but still, I'm not counting it from that tail. But this is a relative point because you have structure. Believe it or not, there's a little structure there. So 1462 with a low of 1462. So we're going to say 1450 by 11. So that's 12, 13, 14. We're going to say $4. All right, now let's go to the daily chart. You guys are gonna wait till you see this. Now, if we go from here, if we start pricing in this move, then y'all just better wait for that one. If that happens, shit, somebody's getting a new vehicle. I assure you that. And I'm gonna be in this trade, and I'm gonna give myself time, and I'm not gonna get shaken out. I'm not gonna get emotional. All right, when this thing goes, it's gonna go, and I'm gonna have some size on it. All right, so we said what, $4? We said $4, $11, and then $14.50. So we said it's like three something, $4, whatever. So let's go here. All right. If you're telling yourself you want to be a trader, you want to trade this, that, and the other, well, this is it. This is me, tired as all hell, going through these charts, coming up with a game plan. So be prepared for it, because there's just so much time you need to put in if you want to be great. I have some other stuff I'm going to go into tomorrow. So we're going to say $4. I'm sorry. I apologize, y'all. All right. So look, there's our downtrend. And I started from here. No, I started from here. Yeah. So 1092, call it $11. And then 1450, 1461, call it 15. We'll call it $4. 12, 13, 14. Now I'm second guessing myself. So this line, sorry, this, I'm gonna make this a 1 because it's probably messing with y'all. All right, and I'm sorry if I need to hurry up, that's fine. You guys just type it in the chat, tell me to hurry the hell up. So we broke, retest. What do we got? 1186, 12, 13, 14, 15, 16, and that is 1185. You know what? Let's do this. This is a hell of a lot easier. Let's put some brains behind it, okay? Okay? Okay, guys? We're going to put some brains behind it, okay? So you better watch out. We're going to put the brains behind it. Oh, I can't move it. Oh, yes, okay. I can still do it. I'm just playing. Buddy mine used to... It's just funny. Just funny. Look at that move, y'all. Look at that move. And this is a rough estimate. Now I can do the math and just put a $4 range in there. All right. Is that where we want to be? It's kind of slanted. Look at that, guys. Look at that. And look where it puts us. Resistance. And this isn't just any old area. Look, you're on the top side of this range again. That's what it's telling you. And then that is our look, and then that's where I started the original pennant from. So this is what you guys need to learn and do, is measure the moves. Not only do I have one just in case, but I have two. I have the bigger, the smaller. I don't know which one they have on their screen, but I do know with this one, they have it on their screen from what I just showed you with the 15-minute chart, how it's literally bouncing right off of that downtrend. They're buying it up right on it. They're closing it to it, buying it off of it. Okay, and then we had an increase in volume. Why just a random increase in volume on a Monday? You know, was that the Ford news, the Tesla Ford news, because they all knew that news was going to come out, or they knew that their stock was down here, so they said, yeah, let's go bring out that news that we already knew we were working together on. Do you know, the market is good for that. Y'all notice that. How you know, you'll get your pattern down, and you'll see something really nice, and you'll be damned if that next morning there wasn't some news to get the stock going. Just like the Lucid trade I told you about, how with Apple choosing Lucid, or didn't choose Lucid. In the real world, they weren't worried about a vehicle. They were worried about other things. But still, they said that rumor went through, and then they made their money, and we made our money, and stock sold back off. But they do have a couple. My dad and his friend / boss. They have They have a couple of Lucids. They have a couple of really nice cars in the garage. Anyway, so yeah, they are nice. I like Lucid. I hope Lucid can make it. I'm just getting nervous that they're going to run out of money and there's just too much, like, the automobile sector and automotive stuff is just so capital, and it's so capital intensive, and are the margins worth it? And maybe for a few, but not like a ton of investors. Is it going to be worth it? Maybe it is, maybe it isn't. Maybe they grow to do something else. I don't know. That was just, I don't want to get down the rabbit hole, but I want to go over these charts. So this is our, I'm starting to get tired, and then tomorrow. So yes, we said the top of this. Now this, yeah, right there, roughly. And what is? Did you guys see that? Where was it? Sorry, I do apologize. I'm going to get through these quick, I promise. Yeah, right there. Look at that. Look at that, y'all. I might put another line right there because that's your gap. That's your gap fill. All right. I just wanted to show you guys forward because it's on my list, because this pattern is like, you kind of want to watch it for the obvious reason. Okay. It's putting in a really nice setup. You have the 200-day up here, which also aligns with this prior gap. You had the gap here, gapped up, gap down. No, gap up, actually. I'm sorry. Yeah. Gap down. I'm not going to spend a bunch of time on these. We'll get it another day. Amazon. All right, daily chart, y'all. I can get rid of. So I was looking for this to pull back into the here. I was looking for it to pull back into the trading line, the 9 EMA, and I never really got it. You see how it pulled away and then just got bought back up. But yes, I am looking for that inverted hammer candle. I am looking for a little downside. The volume still, it's so, as in low. So volume's going to need to pick up if you're going to break this level. This level is pretty big, guys. This is your previous gap. All right, zero resistance. Boom, gap. And we traded this. Sorry, I'm just getting tired. I may have to wrap up and do live tomorrow. But I'm going to come up with a sheet and everything. I know Ray wanted to go over A or B and B real quick. Look at this double top, you guys. So we might want to look for some weakness. I'm going to come up with some names that were weak and strong that we can go off of as the week starts. We'll be prepared Sunday night and kind of, we'll have a list together and then we'll see where the market wants to take us. But again, you might have news or something or other. 15 minute. I was already there. See that flat top resistance here? I want to see if we can possibly pull into there. If it doesn't break this level, then I want to see if we can get a pullback into there. Yeah, right there. That's perfect. Even though it didn't test it, it's still perfect. Let's go to Tesla. Sorry, yeah, I'm getting tired, guys. I'm going to have to end this stream here in a couple minutes before I start falling asleep. But I hope you guys had have learned something. Again, tomorrow we're going to go live. We'll go through, find relative strength, relative weakness. I have a list I'm going to go through. Tesla resistance. Look at this, man. Look at that hold of the prior day's high. That right there is beautiful. That is a beautiful chart. All right. Keep these things like hung up. All right. Or something. Now, how would you know? Let's go to the 5 minute. How would you know that, like, without going to the daily and this and that, you know what? This was a clean hold of the previous day's high. What makes me think that this is going to continue to go higher? Well, you hold it off the open. You have a pullback. But what happens here? All right, you break the new high that was put in of that morning and of, the past week. That's a new weekly high. You put it in and, you pull back a little bit to shake them out, but this is a 5 minute chart, but there's your trade line. You hold the trade line. That's a buy signal. Bada bing, bada boom. You're on your way. You got your ticket to the gravy train, baby. Things like that. That's a new weekly high. So you broke the high from yesterday. You held the high, the previous high. And then you buy off of it. They pull back. You see this tail. They pull back again. They try and bring it down. But the SPY and the overall markets are coming down. So, of course, it's going to pull back. But once you get going, like once it doesn't continue to break, like after a while, if this stock's not coming down and this previous high isn't breaking, you're going to go up. Yeah, you could trade sideways, but not on, like I say, if I bring up the 15-minute chart, let's see. I mean, the volume was, it's a little bit above average. I mean, look at that. That's a little bit above average, because look by 11 o'clock, 10 o'clock, look how much is dying off, and look how much is still here. That's relative strength. So again, use that. My point is that once you held it and you continued to just, the buying didn't stop. You started to break the high on increase in volume at that. See? Here. Like I could draw a slant. Nope, I can't draw a slant because that's not the slant tool. Alright guys, see the increase in volume? See the increase and then a decrease on the pullback? And then the increase. See? And then so anyway, you hold the previous high, you've held the yesterday's high, and then from there, after this candle on the 9-minute, guys, and this you see this tail, boom, you see that candle, just buy it. I mean, I would just buy it. Buy next week. If you play options, get them for the next week because it's Friday. You don't want to be stupid and think that you're just gonna flip a whole bunch of, because these weekly dailies aren't even gonna pay that much. Well, actually, they're gonna pay a little bit because it's around 11 o'clock, but there's already been relative strength. So you're already paying up for these contracts up here. So just get the following week. Go $1 or $2 out the money or get in the money. I don't care what you do. I'm not a financial advisor. I'm not here to tell you what to do. But put yourself in the right position to make that that you're going to make the most out of those options. We know how to do that. We teach that. All right, we teach that. We teach the math. We teach the formula to know the risk. What option on that option chain is going to pay us the most? What's going to give us the bang for the buck? We do that. That's what we do here because we have an education. So anyway, easy trade. All right, easy trade. I'm going to watch the China ADRs. I'm going to go back over these tomorrow night, guys. Again, look at my levels are just, this isn't it, China ADR, because sometimes China stocks like to do their own damn thing, and you can't really trust your levels. I mean, you can trust them to an extent, but they're not going to stick them like an AMD or something like, let me pull up AMD and look at the levels that I've had up on that. I had these levels up before it made the highs, and it was like look, boom, 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 support. You know what I mean? Like, look, resistance. So in here, like, look at these. Look, just sticking them, y'all. So we'll go over AMD tonight and then tomorrow. Look, man, and it sold off again. So I thought about shorting AMD again. I didn't know what it was going to do there on that bear flag. I really didn't. Like this was the weirdest, longest bear flag thing I've ever seen in my life. Have any of you guys seen anything like that? This I'm like, and I'm telling myself the whole time, I'm like, well, if it's not going down, it's got to go up. And if it's not going up, it's got to go down. It can trade sideways, yeah, but for how long? It's like, and in what manner? Because you've already sold off. So that was pretty crazy, wasn't it? That was pretty crazy. I've never really seen something like that. Maybe you guys have. Maybe it's just me, but maybe it's because I like to put myself on the side of strength and weakness, not just, you know, on a day where it's just going to trade in and out and sideways. There's so much more too, guys, that you guys want to learn. Tomorrow, I'm going to make a video on, and it's going to be titled, So You Want to Be a Trader. So you want to be a trader. Okay. So you want to be a trader. Guys, I appreciate you guys joining me tonight. I'm going to come on live. We're going to go through NVIDIA, AMD, all the good stocks, CAT, Airbnb. Ray, I apologize. I will get to your ticker. Doesn't seem like we have very many people on here. All right, but we're trying. We got a lot of good information that we'd like to get out. It's only been an hour and 15 minutes, which is good. I guess 115 minutes. Yeah, it's the same, right? So yeah, guys, thank you for watching us. I will reiterate the IWM and the Dow. They broke out. That's healthy. That's breadth. That's that gap in the market that was, the Qs and the SPY could not continue to go, and the rest of the market could not continue to move higher to make another leg higher without them, because you have this gap. Something's wrong. Risk is not being taken. They're putting their money in more liquid names, and in a healthy market, the markets just move up together. So with that said, I hope you enjoyed the show. Tomorrow, I'd say maybe 8 o'clock, we're going to go live. If you guys want to like, share, subscribe, if we've earned it, please do that. We would greatly appreciate if you give us a thumb up, a subscribe, maybe even a comment if you could. Send karma your way. Okay, that's good karma, just in case you didn't know. All right, if there's anything you guys want to know about me, a ticker, trading in general, fill up the comment section. All right, we went over the unemployment data, that we're seeing a trend, a yearly trend there. We know the IWM has the rebalancing, so maybe that helps. And then you had the debt ceiling pass, jobs numbers, a possible pause in rate hikes. That's the news. What we're not hearing is there's rumors this bank's going to go talk to a tax advisor or a legal advisor or whatever. This bank's thinking about, this bank is this and that. That's not what it is. The unemployment rate isn't ticking up. It is staying sideways. It's kind of ticking up, but so you gotta just throw them pennies throw the coins into the bucket. The soft landing, the hard landing. I still think it's a hard landing for most, because there's hard times for most because of food and groceries and stuff. The Fed needs to worry about the people on fixed income. Yes, they absolutely do. All right, because those are the people that truly hurt. They can't get up and go to work. Their healthcare costs go up. Their food costs go up. Everything goes up, and then they're just priced out of life. All right, and they don't teach this shit in school. This inflation game, they don't teach it in school. Hell, even as a kid, who's going to pay attention anyway? But at least you were told, and maybe you would have picked it up and had it in the back of your mind. All right. So next time you just think about those people out there that that are on fixed income. So I hope you guys had a good time. I'm sorry we didn't get to go through some charts. I'm sorry that I spent too much time on some other things. I need to work on that. Again, I am a work in progress as everyone else. All right. I hope you guys have a blessed night and a we will see you guys tomorrow. I'm going to say around 7:30, 8 o'clock. I will post the thumbnail tomorrow morning and give a time. So be on the lookout for that. Again, if you could, please like, share, and subscribe. Bring karma to yourself and your family and me. We're going through a lot. I hope it ends. I hope we're done with it, but seems like there's just more on the table. So, with that said, you guys have a great night. Thank you guys for joining us. Again, we're live Monday through Friday, 7 a.m. to 4 p.m. You guys have a great night. I'll see